The top business stories live from the Sky News City studio. Grocery price inflation continues to fall, but more slowly than in December as supermarkets offer fewer promotions. Shares of Diageo fall by nearly 3% after a drop in sales at the world's biggest spirits company.
Latin America, we are seeing materially weaker performance there. It's a bit of the perfect storm. Anything that could go wrong has happened to us.
Plus, HSBC is fined £57.4 million for serious failings over customer deposit protection. Good morning, this is Business Live with me, Ian King. Grocery price inflation continued to fall this month, but at a slower pace than in December, according to figures published this morning. The marketing data and analytics company Kantar says that during the 4 weeks to Sunday, the 21st of January, grocery price inflation was running at 6.8%, down from 6.9% in December. That compares with the 2.2 percentage point decrease seen between November and December and reflects the fact that fewer items were on promotion. Well, joining me now is Fraser McKevitt, Head of Retail and Consumer Insight at Kantar. Fraser, good to see you this morning. While the rate of inflation has moderated, decrease, we should still point out this is still the lowest reading in nearly 2 years.
Yes, it is. But I think it is a little bit disappointing that it's not falling at a faster rate. And that is going to worry shoppers, I think, because historically, inflation in grocery has run around the 2 to 3% mark. So if it does get stuck in sort of 6 to 7% level, that's going to add an awful lot to grocery bills. There might be more to this story, though. It might actually be it came down incredibly fast, the rate of inflation, last month, as you said, the 2.2 percentage fall going into December. And we know there were a lot of promotions during that Christmas period, and they have eased off slightly. There are still a lot of deals out there, but they have eased off this month. So it's perhaps not unsurprising that the rate of decline has slowed.
Fraser, why do you think supermarkets are being less promotional this month?
Well, when you look across every single year, there's always an awful lot of promotions over Christmas. That's the most important time of them to get shoppers through the door. So there is always a cutback in the promotions on the shelf when we come to January. That doesn't mean that supermarkets aren't trying to offer value, though, because they know how the nation feels. People haven't got any money after Christmas. It's a long month. It's dark and cold, and people's thoughts turn to budgeting. So there are, in fact, nearly £500 million more spent on deal this January than last January. So I think the industry would make the argument that they really are trying to offer those offers for people, but it's just not quite as much as last month.
Now, this time of year, normally you get a spike in health promotion, health-related items. You haven't seen that spike this year.
Well, we're seeing that whole trend about a very healthy January, and particularly people moving into those plant-based ranges, just easing off a little bit. Now, that's not to say sales of those products have gone down. It's just less about January now, and it's more about trying to eat like that throughout the year. So January's becoming less important for health as people moderate throughout the year and change their habits, perhaps eating plant-based, even if they're not vegan or vegetarian.
Now, in terms of the individual market shares, the thing that jumped out at me this month is just how well Sainsbury's is doing and just how poorly Asda is doing.
Yeah, so Sainsbury's have carried their strong momentum over from Christmas into this latest data. And there are 4 retailers who are managing to win share. So Aldi, Lidl, Tesco, and then Sainsbury's. And it is a fixed market grocery. So when there are winners taking that market share, there are going to be retailers that are coming under pressure. So they're all trying to make plans for the new year. How are they going to get those extra customers through the door? And Asda, of course, are under a little pressure, but they do have plans out there. They are rolling out their convenience store estate, which I think they'll be hoping makes them a lot more accessible to their rather limited number of large stores that they have at the moment.
Yeah, we shall see. Fraser, always good to catch up. Thanks for joining me today. Some other business news stories for you now. And HSBC has been fined £57.4 million by the Bank of England's Prudential Regulation Authority for what are described as serious failings over customer deposit protection. It's the second highest penalty ever imposed by the financial watchdog, which the PRA said reflected the seriousness of the failings. The record remains an £87 million fine imposed on the now defunct Credit Suisse in July last year. Well, the offences, which occurred between 2015 and 2022, included a failure to accurately identify customer deposits that were eligible for protection under the Financial Services Compensation Scheme. PRA also said the lender failed to be duly open and cooperative with it for a period of approximately 15 months, during which it failed to alert the regulator about problems identified in the incorrect marking of accounts as eligible for FSCS protection. The parcel delivery firm Evri could be sold, according to reports. Reuters says that the private equity group Advent International, which owns 3/4 of Evri, is considering options for the business, including a potential sale. While Evri, which was previously known as Hermes UK, has been majority owned by Advent since 2020. The business dates back to the old Grattan mail order business founded in Bradford 50 years ago. The remaining 25% of the business is owned by the German company Otto Group, which acquired Grattan in 1991. Pets at Home admitted today that annual profits will be lower than expected after sales in its retail business proved disappointing around Christmas. Profits for the year to the end of March are now expected to be around £132 million, some £4 million lower than previously forecast. Pets at Home said that during the 12 weeks to the 4th of January, sales in its veterinary business were up 13.3% on a like-for-like basis, but its retail operation saw sales rise by just 3.7%, which was below its expectations. It said this was partly because it was up against a period of exceptionally strong trading a year earlier. Shares are currently off some 2%. Our shares of Diageo fell by more than 3% at one point this morning following a drop in sales and profits at the world's biggest spirits company. Diageo, which owns Johnnie Walker Scotch Whisky, Smirnoff Vodka, Don Julio Tequila and Guinness, reported net sales of $10.9 billion for the 6 months to the end of December. That was down 0.6% on the same period a year earlier. Well, underlying operating profits slipped by 5% to $3.5 billion. It reflected previously highlighted issues in Latin America and the Caribbean and a drop in sales of Ciroc vodka following a dispute with the rapper Diddy, who had promoted the brand. Well, I've been speaking with Deborah Crew, the chief executive, and began by asking her whether the situation in Latin America was a one-off blip.
Well, no doubt the last 6 months has been very challenging for Diageo. And Latin America, we are seeing materially weaker performance there. It's a bit of the perfect storm. Anything that could go wrong has happened to us. We were seeing great growth in the region over the past 3 years, 50% bigger business than what we had. We were gaining share, expanding distribution, significant volume, significant premiumization. And then at the beginning of last calendar year, we saw a sharp decline. Unfortunately, there was already inventory in the market preparing for that kind of higher growth environment. And so we got stuck with a lot of extra inventory. It really is just a near-term issue. And what we announced this morning is that we look to get back to more appropriate levels for the current consumer environment by the end of this fiscal. So, should not bleed into, the business going forward.
You make a point in the statement about down trading in the region. I mean, for many years now, Diageo's strategy has been all about premiumisation, encouraging people to trade up. Is what's happened in Latin America, does that call into question the validity of that strategy?
Look, we're still seeing premiumization broadly across the globe, but we do have pockets of down trading, and Latin America is one of those areas. Of course, we do have a very broad portfolio, particularly on Scotch. So Scotch is really, big in Latin America. And so what you see the team pivoting to is our more standard and premium Scotches versus the super premium Scotch that they were selling, during that COVID super cycle.
Now, in North America, it looks as though tequila sales have been under pressure, obviously a great engine of growth in recent years. Is that just down to inventory issues?
Yeah, so tequila is, let me unpack this a little bit, because actually our tequila numbers, we are gaining share in the tequila. Our tequila portfolio is gaining share of total spirits. So we feel good about our tequila portfolio in total. We are lapping replenishment from prior years, so this is some of that supply chain normalization that we've talked about. Tequila had great growth for us. It took us a little longer to recover on our aged tequilas last year, so we're lapping that recovery. But when you look at, from a consumer, what's actually selling to the consumer, like businesses like Don Julio as an example, shows up in our numbers in North America, is growing 2%. Actually, we're seeing in our depletions, so that would be sales to customers, as well as in Nielsen, you see we're growing more like 12%.
You make an interesting line in the statement about Ciroc, where volumes have fallen off. Is that just a victim of changing consumer tastes?
Well, of course, you know, we were in a quite publicized dispute with Mr. Combs. He has withdrawn his allegations, and we've parted company. So we're very focused on getting Ciroc, having the team really focused on driving that business going forward. We've got great innovation planned for the second half on Ciroc. We've got Limonada coming out. So, you know, we're looking forward with what we can do with the Ciroc brand as we move forward.
Now, Europe looks to be one of the highlights in this reporting period. It looks as though you've sacrificed a bit on margin, though.
Well, you know, so actually in Europe, we feel very good. You know, I mentioned in the press release this morning that if you exclude the final sales of inventory into Russia, actually Europe was up 5.8%. We did spend some investment in the brands long term for Europe. We have great share growth across the region. Most of our markets are gaining share. So it was a very deliberate investment into marketing.
And more broadly, how do you see the outlook for inflation?
So, you know, we're seeing inflation, you know, I would say moderate. We still are seeing inflation. We've got double-digit inflation, but we are seeing it moderate, and particularly in some areas like domestic transport, say in the U.S. So, you know, there's places we're seeing it come down a little bit, moderating, but we're still seeing, you know, fairly high inflation in our business.
Obviously, geopolitics are to the fore everywhere right now, and particularly the Middle East. I know you have a sizable business in Israel and Lebanon. How has that been trading of late?
Well, as we mentioned at our Capital Markets Day, you know, sales virtually stopped going into our distributor at the outbreak of that conflict, and things are not back to normal. So impacted, you know, our performance certainly in the first half, and it's just, you know, unfortunately something we're just having to manage through. As we look at these type of, you know, conflicts and what's going on, we're just focused on really controlling the controllables.
Now, Deborah, yesterday Flutter Entertainment listed on the New York Stock Exchange. The North America is the biggest part of your business. You report in dollars. Has the company looked at the merits of listing in the US for its primary listing?
Well, you know, as part of any good governance, we always look at where is the, you know, the best place to domicile. That being said, you know, we still look at London being you know, the right place to be, and so, you know, at this point we don't have any plans to go anywhere.
And I think UK stock market investors will drink to that. Now, the Eurozone narrowly avoided technical recession during the final 3 months of last year, despite a contraction in Germany, its largest and most important economy. Data published this morning by the EU statistics agency Eurostat revealed that Eurozone GDP was flat from October to December compared with the previous quarter. That was better than the 0.1% contraction expected, which, on top of the 0.1% contraction seen in the third quarter, would have meant a technical recession, which is defined as 2 consecutive quarterly contractions. Well, a number of economies, notably Spain and Portugal, achieved quarter-on-quarter growth, but the Republic of Ireland is in a technical recession. Well, joining me now for more on this from Berlin is Holger Schmieding, Chief Economist at Berenberg. Holger, great to see you this morning. The figures were marginally better than expected. Were you surprised?
Well, slightly surprised, yes. The Eurozone periphery, especially the erstwhile Euro crisis countries such as Portugal and Spain, and probably Greece as well, are doing even better than expected. They have a lot of lost ground to recover, and they are doing that. So the periphery is lifting the Eurozone up.
What about Germany? I mean, it contracted 0.3% quarter on quarter. Can it avoid a technical recession?
Well, Germany will have problems avoiding a technical recession, at least for the first quarter of this year. The outlook for Germany is also somewhat subdued, more subdued than for other countries, because the weakness in global trade and the inventory correction in manufacturing that is weighing on Germany is going on. Also, we have a bit of fiscal concerns in Germany, which early in the year will probably cloud the start of the year. But looking beyond that, we do expect some rebound in global trade. We expect the inventory correction in manufacturing to be over by spring, and that should then help Germany to also start recovering, like much of the rest of the Eurozone has already done.
Now, you mentioned the periphery there, Portugal and Spain bouncing back nicely. The other economy that struck me as doing quite well this quarter was Belgium. What's going on there?
Well, Belgium is often a bellwether for the overall European economy, for the overall manufacturing cycle, but Belgium seems to be far less exposed, for instance, to the Russian risk and to the inventory correction that's happening in Germany. So Belgium is indeed outperforming. Having said that, as a small economy, Belgium, the data are often a bit too volatile to draw too many conclusions from them on a quarterly basis. But yes, Belgium is doing better.
Now, in terms of the laggards, it looks like the Republic of Ireland is in a spot of bother. What's going on there?
Well, in Ireland, we should not take these GDP data too serious because they are often distorted by the vagaries of transactions between the European headquarters of global tech companies in Ireland and their parent companies in the US. So the Irish data are so volatile that they do not tell us that much about the Irish economy, which is having some problems, for instance, in the residential market, but which are not so pronounced as to say that Ireland is really, really doing badly. It's just volatile, having been a strong supporter of growth in the Eurozone in previous years. Recently, Ireland has been an underperformer. It will likely bounce back nicely over the course of this year.
Now, Holger, if you were sitting in the European Central Bank headquarters today, what will they be making of these numbers?
Well, the numbers for the fourth quarter of last year were slightly weaker than the ECB had expected in December. They were looking for a marginal 0.1% increase quarter on quarter. Having said that, if we abstract from the funny Irish oddity, the data are not really much weaker than the ECB had projected. This is just a fraction. And as a result, I don't think that this will shape the discussion at the European Central Bank very much. Probably the ECB will want to wait for wage data for the first quarter before it cuts rates in June. But if some early indications about wages suggest that wage pressures are cooling early this year already, then an April rate cut by the ECB is possible.
OK, Holger, we'll have to leave it there, I'm afraid. Haven't had you on the programme for a while. It's nice to see you again. Thank you.
Thank you.
Still to come here on Business Live. We'll have a look at how the markets are doing this Tuesday morning. Don't go away.
My very first memory of the violin is actually from my grandmother, and is when I was 3 years old, she showed me what a violin was, and it was a real discovery for me. And I think that's what sparked it. She transmitted something to me, I think, without saying much. My grandmother was living in the northeast of France with her parents, and so she played the violin, and she'd kept this little small violin, and she'd hang it on her bedroom wall. And when Germany invaded France, they wanted to try to escape to the free zone, so they tried to go to the south and ended up in a city called Perpignan. However, when you had to escape, you had to be very careful if the neighbors would know about it or people would know about it, because they could snitch on you. So my great-grandfather decided to stay in the house whilst my grandmother and her mother would escape and do as if everything was fine. So they escaped. My great-grandfather stayed. When the French police came, the milice, they actually beat him nearly to death. But he was actually still alive and managed, thankfully, to join them after. They completely sacked the house. And the incredible thing is that when they came back, a few years later, they came back to the house, it was completely empty. There was just broken things on the floor. But there was something quite magical, is that the small little violin was just in the middle of the living room, just intact. And that was the only thing that wasn't broken. And I know she didn't like talking about it because of how traumatic it was. However, I believe it's so important that we share those stories, because I think history, being told in a history book is something, but when you hear history from people who've actually lived it, it just takes a whole other dimension.
Slide Emirates, slide better. Fly Emirates, fly better.
Thank you.
Welcome back. Time for a look at the markets. And last night's gains on Wall Street, during which the S&P 500 hit another record high, were followed by a mixed session overnight for equities in the Asia-Pacific region. Well, in Europe, stocks are all trading to the upside this morning. That's the main indices. The pan-European stock 600, by the way, I should tell you, is currently touching its highest level for 2 years. Talking points today, there are some fallers, and one of them is Hapag-Lloyd, the German container shipping group. That's off 8% in Frankfurt after fourth quarter earnings proved worse than expected. Obviously, a lot of Red Sea disruption facing that company. Here in London, the FTSE 100's up 0.5% in a broad-based rally. The leading gainer in percentage terms is private equity firm 3i. That's on positive broker comment. While Flutter Entertainment is ahead by some 1.5% following its confident debut last night on the New York Stock Exchange. Not too many fallers to mention, but the paper and packaging group Mondi is off 2.75%. That's on adverse broker comment. Outside the FTSE, another busy day for reporting news. SSP, the travel catering company, up 0.5% on a trading update. Meanwhile, Saga is up nearly 2% on news. It expects full-year underlying pre-tax profits to more than double on the previous year. To the downside, Deliveroo has fallen by nearly 4% after its German peer Delivery Hero sold its 4.5% holding in the company. On the foreign exchange markets, it's all quite quiet ahead of tomorrow's interest rate decision out of the United States. Sterling off nearly 0.25% against the dollar. It's also off by just over 1/3 against the euro. Single currency, meanwhile, up 0.1% against the greenback. The oil price sold off overnight. It staged a modest rally earlier this morning, but it's now in negative territory on the session right now. A barrel of Brent crude currently changing hands at $82.21 a barrel. That's off nearly 0.25%. Well, joining me this morning is John Wynne Evans, Head of Investment Strategy Research at Investec Wealth and Investment. John, good to see you this morning. Diageo, obviously the showstopper in terms of company results today. What did you make of what they had to say?
Well, they were definitely slightly disappointing, and you've had the CEO on and she's trying to explain what's going on there. I think there's an element of sort of a hangover for the whole of the spirits industry here. There was some, big demand build-up during the pandemic. There were sort of changes of consumption habits, those sorts of things. That fed its way through to the inventory chain, and there's basically just, there's too many bottles in the cupboard at the moment, and they've got to sort that out. And at the same time, a little bit of a slowdown in possibly underlying consumption as well. But at the end of the day, it's still a high-quality compounder. I think this is a cyclical problem rather than a structural problem, and the shares have been weak for several months now, so not too nasty a surprise, really. Yeah,
as you say, still a world-class company.
Yeah.
What about WPP, another global leader based here in the UK? They've had a capital markets day today.
Yes, they did, and they made some projections for the future. Interestingly, they lowered some of their growth forecasts, but they increased their margin expectations. And they pointed towards, a lot of people are going to hear these letters from AI coming into their business, and particularly the use of their proprietary data sets. And I think that's a thing a lot of companies are going to be telling us about. A lot of companies have their own data, which they've gathered. This is not stuff that's in the public domain necessarily, and it's being able to sort of interrogate and use that data to make your own business more efficient and to be able to kind of work better with your customers as well. And I think we will be hearing more of that and the monetization of AI as the year goes by.
OK, John, I'm so sorry. We're going to have to cut it there because we've got some breaking news. The Northern Ireland Secretary is speaking right now on the news overnight that the DUP will participate at Stormont. Let's listen in.
I'm pleased that the DUP have agreed to accept the package of measures that the UK government has put forward. And as a result, they are ready to return to the Northern Ireland Assembly and nominate representatives to the Northern Ireland Executive. I can confirm that today I've updated the Cabinet on this significant development. And as agreed with Sir Geoffrey, and obviously subject to the finalisation of all party talks today, I will tomorrow publish the details of the proposals we have made to secure Northern Ireland's place in the UK internal market and to strengthen the Union. I believe that all the conditions are now in place for the Assembly to return, and I look forward very much to the restoration of the institutions at Stormont as soon as possible. There was a financial package worth over £3 billion offered to the parties before Christmas. This will absolutely be available to an incoming executive. The parties entitled to form an executive are meeting today to discuss these matters, and I hope we'll be able to finalise this deal with those parties as soon as possible and move forward. And after that, I'm happy for questions. No, it hasn't affected divergence in any way, shape or form. However, what has changed has been, I guess, an understanding on my part of the needs of unionism in Northern Ireland and on the UK government's part, and a very long conversation with the Democratic Unionist Party on how we can make better Northern Ireland's place in our internal market.
Emma, UTV. Are you prepared to release the money now for public sector payables as a goodwill gesture?
As I say, the financial package will be available to the incoming executive.
Sam Coates, Sky.
Secretary of State, to repeat, what has changed? Are there going to be fewer checks on goods coming from Great Britain to Northern Ireland? How will Northern Ireland's place be different under this deal than it was previously? Or is it just a smoke screen? Nothing really changed?
There are some significant changes, but you'll have to wait until the packages, well, not the package is finalised, but the all party talks are finalised, and when I publish the deal in Parliament, everyone will see what it is.
How can there be a deal on the basis of a secret package?
It's not a secret package. We've been talking because it is Sam. It's been a negotiation, and the negotiations have been between the Democratic Unionist Party and the UK government. We have been talking to them over a period of weeks and months. There is a package in place now that we are now briefing the Northern Ireland political parties on. There are all-party talks going on this afternoon in Northern Ireland, which I'm going to head off after this press conference too. When they have finalised, I'll be in a position to publish, and I will.
Chris Mason, BBC.
Thank you. Just picking up on Sam's question, Secretary of State, on the specifics of goods that are travelling from GB to Northern Ireland, is it right that they will be able to make that journey without checks and without paperwork? Just to follow up the question earlier about the money, given the thing on the strikes coming on Thursday, you're explicitly saying that money doesn't get released until the point that the injuries you saw. In other words, in all likelihood, it will appear beyond that point on Thursday.
So yes, the money is available to an incoming executive. And so when the executive sits, that money will be freely available to that executive to deal with as it sees fit. And public pay is rightly a matter that is devolved. And so I believe they're the right people to be doing that element of this business. When it comes to, I'm afraid you will, Chris, have to wait to see the deal. But we have been able to achieve quite a vast array of decent improvements to make sure our internal market works properly as it should do, and you'll hopefully be able to see those tomorrow.
John, RTE.
I and government colleagues talk to our European Union partners on a regular basis, and I will continue to do so.
Were they consulted about this particular?
We talk about all sorts of things, John.
About this particular?
We talk about all sorts of things.
So you, Paris, Will you have to go back and renegotiate with the EU if this is negotiated?
I don't believe so.
Is the reason that you're keeping it quiet
Ben, PA?
because you want to bounce the EU?
Nope.
Ben PA? Anyone from
Where's Ben?
PA? Or GB News? Nope. Okay, Ollie.
Secretary of State, what's your message to the people of Northern Ireland who have seen this all before and who might be worried on the cusp of Stormont returning that this is just another short-term fix and that we'll be back in the same position again if one party chooses to put it in?
Yeah, well, it is actually that's a really significant question and a completely understandable one and a completely understandable point of view that lots of people in Northern Ireland do have. We, the UK government, are completely committed to the Belfast Good Friday Agreement in all its strands, in all its ways, and we want the institutions to work. This is all about the Strand 1 institution of most importance to the people of Northern Ireland, its assembly, where directly elected members of the Legislative Assembly go to take decisions on behalf of the people that elect them. It hasn't been working for 2 years. Previously to that, there was a period of COVID. Previously to that, there were 3 years where it wasn't working because Sinn Féin chose not to meet. I would like to think that on the basis of this deal, and indeed on the basis of the Stormont break that we have got in the Windsor framework, we can truly demonstrate that the people of Northern Ireland do have a democratic check over the rules that affect them, and that we can keep the institutions up and going in perpetuity. So I really hope this deal does what it should be doing, and history will be its test.
Finally, Channel 4.
Are you confident that the EU will accept it?
I am very confident.
Unionists already saying there's still going to be a border in the Irish.
They're going to have to wait to see the deal and all of its
Cool,
access.
thank you guys.
Thank you. Thank you very much. Thank you.
Well, it is just after 12 o'clock. If you're just tuning in, I welcome you watching Sky News. That was the Northern Ireland Secretary, Chris Heaton-Harris, who was giving his response to the talks that happened late into the night last night with the DUP. He said that he is pleased that the DUP have agreed to accept the measures that the UK government proposed. He was expecting to publish those measures tomorrow because it was conversations between the DUP and the UK government. What is now going to happen is they're going to go back to all the other political parties in Northern Ireland this afternoon and discuss it with them. He said he looks forward to the restoration of the government in Stormont as soon as possible. Of course, the people in Northern Ireland haven't had a legislative in Stormont for 2 years now. Let's bring in our political correspondent, Amanda Acas, who joins me now. Amanda, it does sound like there's been progress here, but of course, there's still a long way to go. They have to get all of the other political parties to agree, and then after that, we will need to get the EU to agree as well, I would assume.
Yes, absolutely. It's very complicated, isn't it? I think actually the Secretary of State there was sounding more confident than the other ministers that we've been hearing from thus far today, although he wouldn't really give away any of the detail of the nitty-gritty of what is actually contained within this deal, which of course is what politicians across the spectrum are really waiting to see about it. We understand Cabinet will have had the chance to have a look at the details this morning, and clearly the different parties in Northern Ireland are discussing it this afternoon. We're told it will be published tomorrow. Now, in terms of what Sir Geoffrey Donaldson has been saying publicly, he's insisted that there will be no there will be no checks on goods moving from Great Britain to Northern Ireland and staying there, and it will end EU law automatically applying in Northern Ireland as well. Both of which are pretty key elements in terms of what the DUP wanted, but also would suggest fairly substantial changes to the Windsor framework, which was announced nearly a year ago and negotiated by Rishi Sunak with the EU, in itself a renegotiation of the original Brexit deal, which of course had that barrier down the Irish Sea, which was seen as such a betrayal by the DUP in the beginning. So the big question really is, what have the UK government given ground on, really, in order to get the DUP to accept this arrangement? Chris Heaton-Harris said that they'd come to a greater understanding of the needs of unionists through these weeks and months of negotiations. He said he would have to wait and see the detail of the deal to get more of a clear idea, although he did insist that they hadn't given ground in terms of divergence from EU rules, which I think is something that Conservative and Brexiteer politicians, particularly in Westminster, will be most interested in, which is really looking at whether or not there's been an agreement that in the rest of the UK that it won't be possible to change rules which have come from the EU in order for the rules in Northern Ireland not to diverge from the EU system. Now, he says no, that's not the case. It's the sovereignty of Parliament will still be in place in terms of what rules we implement, as has been the case following Brexit. He did say we've been able to make decent improvements, ensure the internal market works properly. And also that he doesn't expect that we'll have to renegotiate with the EU. Quite how they're managing to keep all of these different elements in balance, which has been so difficult for politicians to negotiate over so many years since Brexit, remains to be seen. Towards the end of the press conference, he seemed to be, it was a fairly heartfelt moment where he said history will be the test of this as to whether it works, and referenced the fact that actually power sharing in Northern Ireland hasn't been working effectively for many years, with Sinn Féin refusing to be part of the previous executive for a number of years, so there was no power sharing before COVID, and obviously the 2 years with the DUP, and saying that he hopes that this would lead to a more sustainable system in Northern Ireland with a permanent executive running the country.
OK, Amanda, and we shall hear from what happens in Northern Ireland this afternoon and see its publication tomorrow. Thanks very much. Now, a man armed with a crossbow has been shot dead by police in South London. The Metropolitan Police said officers tried to talk to the man in his 30s, but that they were threatened. Well, the man was apparently seen trying to force his way into a building in Bywater Place in Surrey Quays just before 5 o'clock this morning. Sky's Amelia Harper is there for us now. Amelia, what is the word down there? What is happening?